I'm a value guy, and a value guy it means different things to different people. But for me, is if something's really out of favor, you're not really talking about it. Maybe it was once a darling, but not anymore. And then I'm going to have a really good look, because I'm looking to see those assets are not always once were good or once were dead forever. It's sometimes there's something special in there. And 1 out of every 10 you go look at, there's something golden in there. And I think Australian Vintage has got something really special. It's got good assets and it's got some outstanding people. And I think Tom, and we were very fortunate when I had a look in there and I saw Tom and I was like, I've done this for 30 years. I know when I see somebody who's excellent and he's going to be fantastic.
Tom, you've recently flagged that FY26 is transformational.
Yeah.
How so?
I mean, to James's point, I've been in the business now 2.5 years, so I'm not new to the company, but new to the CEO role. A massive part of the turnaround was how do we leverage assets to generate revenue through new innovation? I mean, at the end of the day, the wine industry has not really innovated or changed for decades. If you look at spirits, you look at RTD, beer, every other category is growing through double-digit innovation volume, whereas wine has sat in single digits for nearly 30 years. Why? Because winemakers run wine companies. It's been a huge challenge for the industry to really think about consumers' changing needs. And so a big part of our turnaround is now realising that innovation growth into the market.
So can we talk about what's sitting here then? Is this part of the innovation? I would imagine so, because this looks quite different than the wine that we're used to seeing.
Absolutely. I mean, look, I think the thing about wine or think about beverages, we are absolutely driven by consumer trends. And if you think about yourself or anyone else around your relationship with wine, it really hasn't changed. The format has stayed very stagnant. It's 750 mil. It's a significant commitment, both in volume and money. And we saw a tension. The tension was from Monday to Thursday, people were drinking less wine, because it was a big commitment to consume that amount. You either drank it and didn't really love that you finished a bottle, or you poured it down the sink. So this is a huge tension in the industry. So format was one of the solves that we identified early, but we had to find the right format. We had to find a way to navigate complexity of wine, remove all the stuffiness, create shelf disruption, totally change the way you shopped the category. And so Poco Vino, a little wine, is our innovation on that vein. And what I'm pleased to say is that every retailer globally that I have met with personally is up for it. So we've launched in the UK. We're 7 days into Australia, New Zealand. We're in over 7,000 stores within 2 months, and this will be a game changer for our business.
How did you manage to get into that many outlets, I suppose, distribution outlets, if you think of it that way, in such a short period of time?
Yeah, I mean, James talked about assets. Some people think assets are just the tangible, physical capital assets that a company has. The other asset of a business is your market access. Where do you sit at which buying tables? What market can you access with relative ease if you have the right proposition that hits both margin and consumer hurdles? The massive thing that AVL has is we are a global business. Half of it's in the UK, half of it's in Australia. We do a decent Asia business, but not dependent on it. We do a decent Canada business, but not dependent on it. And so when I do a roadshow and I talk to all the wine buyers globally, they are desperate for innovation and they've never seen it, because it comes in the same bottle with a different label. That's not innovation. Innovation is shifting the way consumers interact with a category. That's innovation. And so basically when we presented it, buyers were falling over themselves to list it. The complexity of the supply chain, the ability to deliver margin, that took the time, but now we're there and it's in the market.
Okay, interesting. So how do you bring this to market, not just here in Australia and New Zealand, but internationally, without overextending? I mean, is that something that you're very aware of, the potential to overextend, when we think about how much inventory is an issue oftentimes for, wine companies as well?
So I'll round up just a little bit on your assets. This business is trading at 1/5 of its asset value. And quite clearly, we think we're on a trajectory where we're going to grow sales and generate cash flow. So do it all, and then you'll close that gap. Inventory's been was a problem previously, because this business had locked in very long-term fixed supply contracts, mainly on reds, and they'd locked them away. And for the last 4 years, if you look at the accounts, the inventory was keep on going up and you were losing cash flow. So we've reversed that. So the first year was a little bit messy in terms of fixing up your cost structure, but you don't buy these businesses to cut costs all the time. You've got to believe they can grow. And this is something which Tom is doing. He's doing others too, which we're going to grow our top line. When you say overextending yourself, you have to keep on innovating. We think this has legs, but I think you've seen enough of Tom to know that we're going to keep going. There are going to be other iteration things we're going to do. We believe we'll keep growing this brand, but there'll be other things too.
So how do you use technology and consumer insights to target growth? Like, is data itself becoming a real competitive advantage?
It's massively important. I mean, when I talk to consumer, it is all data-based. When you talk to a buyer who is responsible for a category within a multi-billion-dollar organization, they don't care about your opinion. They want facts. So what we do is we invest in phenomenal amount of consumer data. We look at occasion analysis, so how drinking behaviours are changing. You know, historically, a huge amount of wine was consumed with meals at home. We're not doing that anymore. We're more social, we're more outgoing, we're on premise again post-COVID. All of that is based in data. So the ability to translate that into either a consumer good, a strategy around pricing or mechanics, like one of the big insights has actually been about how you do discounting. So if you think back in time, the big box formats, Dan Murphy's and the former First Choice Liquor was all about high volume, big pantry stock booze purchasing. That doesn't happen anymore. Mm-hmm. It's more convenience. So all of the data is talking to a much more nimble consumer who wants things now, on the run, on the go, more social, less sedentary. I mean, you can get where I'm going. You know, that really created, again, another opportunity for a small format solution that wasn't being done in the wine industry. That's before I get onto our flavour innovation, you know, about disrupting that spritz occasion that's emerged. So data is absolutely critical beyond getting into AI around forecasting, around forecast accuracy, global supply chain efficiency. We ship nearly 1,000 containers of wine from here to the UK. You know, getting that wrong is not an option. So we use a phenomenal amount of data analysis to ensure that that supply is both on time, in full, but not building too many inventory or using up cash. So it's critically important on every end of the business.
So these are very pretty. I can see this really being a hit amongst the mums around town.
Definitely one group.
Yeah, all right. And the colors will appeal to many, I think. But the wine market is soft. Younger people, we're told, are not drinking as much as they used to. So what sort of price or margin levers do you have to pull? Also, I suppose, how sensitive are you still to input cost inflation? Yeah,
I mean, inflation's not going away. That is a fact. Anyone who says we'll return to pre-COVID normals of shipping, energy costs for glass production, I mean, is dreaming. So in our baseline numbers and our free cash flow generation, we have totally banked the fact that we're not returning to pre-COVID norms. But even with that ongoing, we believe that innovation still can drive margin accretion. So if you take our core business, our baseline wine, very hard to get price inflation, and that's been one of the things pressing down on the wine industry. Your ability to increase price outside of being Penfolds and Grange has been very challenging for the industry. But when you solve a problem for someone, their willingness to pay more is demonstrated in huge amounts of commodity categories. Take the mini Coca-Cola, for example. When that emerged, people are paying nearly 200% more than a 1 litre version because you've solved a problem for me. You think about Cadbury favourites, you think about Mentos in little packets at every office. Every one of those shrinkification, or however one you describe it, is generating significantly more margin for these companies. So for me, innovation will not just drive more consumer appeal and revenue, but it is generating significantly more margin. But to your question around ongoing inflation, we also then need to be smarter about how we source. So one of the innovations around Poco Vino is in every market that it is sold, we're packing it there. So we're insulating ourselves against global geopolitical issues, environment, shipping cost. And that's seems like obvious, but most wine companies don't think about, oh, how do I now put American wine in American Poccovino? It's like, how do I get Australian wine there? That's not our mindset. So we're innovating the entire supply chain.
So, James, for our audience and potential investors, what will you be looking for in the next reporting season to really give you an indication that this turnaround has legs? Is it cash flow? Is it margins? Is it sales growth?
You brought this up in the beginning. How do I allocate my capital as the chair or investor? And to be fair, they're all one and the same. I'm here to make money for my investors, my unit holders. And if other shareholders hop on board, good on them. Come for the ride. The first step was we had to pull out costs. And we did that, and some of that cost us some money, but we had to invest also for innovation, which we've done. So the first thing you'll see is top line growth, and the second thing you'll see is we'll stop losing significant amount of cash flows. So we forecasted top line growth. We'll pull that cash flow into neutral this year. Next year we'll see more top line growth, and then we'll start generating really good cash flow. And so for me, and I'm also a business owner, I'm always puzzled that over the long term you can think you can run a sustainable business without generating cash flow. And I said to everybody when I first came in there, I said, where's the cash? Show me the cash flow. And so ultimately that's where we're going.
So, Tom, it seems to me, when you're thinking about this innovation-led growth, which is what this is essentially, is Australian Vintage becoming less of a wine company and more of a branding sort of lifestyle brand?
That's a great question. I mean, there's always that long-term strategic reevaluation that you do as a business. Does rebranding ourselves as a beverage business give us more growth or more mindset to go beyond? Actually, I think we're just more of a modern wine company, because what I believe is, like, as a company, we have phenomenal IP in wine procurement, wine processing and blending, getting the best value out of an agricultural-based product. It's been around for a very long time. We've just got to rethink sourcing. We've got to rethink about how we convert that in the most margin accretive way, but still delivering on consumer taste and preference. And I think we're unapologetically a wine business, and there's still going to be a huge market for this kind of product in the future. I challenge anyone to go to a restaurant and look around the room. 90% of what is being consumed is wine. It is totally intrinsic with every celebratory moment that you can think of meaningfully in your life, through champagne, sparkling, a great meal accompaniment, the best meal of your life, which is transcendent for a lot of people, right? We are pleasure seekers as a human species. So I think we are a modern wine business, but we're rethinking the boundaries that have been placed on it in terms of terroir, the way it's going to turn up, all the traditions that have been holding this category back, which has not held back the others.
In the late 90s, early 2000s, I used to cover beverages out of London. So I remember Smirnoff Ice coming with Diageo. I remember those days and the excitement. And I never used to think about wine because it was just forgotten about. It held too much capital. The return on capital was really, really poor. There was no innovation. And so when I looked at this business, I thought, yes, you can pull out costs, but where was the growth? You said in the beginning. And when I saw this, I thought, oh my goodness, I've never seen anything like this in the wine industry ever. And besides all the other things you've spoken about today, Tom didn't even mention how it's stacked, because it's also quite useful for our customers that it stacks really easily, horizontally. Which is also
you mean
something,
physically how it's stacked?
Yeah, yes.
Right, okay.
Yeah, so it's a total solution. And again, it's wine industry thinking about not just the consumer, but also our customer. Our customer are retailers.
Yeah.
It's incredibly laborious wine. You walk the aisles, I mean, it is almost 4 aisles of wine compared to one bay of spirits. Yeah. It's a pain.
Well, sometimes I do get a little lost when I'm in there.
That's right.
Final question. So that's as a consumer and as a stalker, but what about it as an investor? What do you want an investor to take away from this?
I think I look at our business and we are trading so below our NTA. All I want investors to have the confidence in is that we are leveraging those assets to drive margin, top line growth, and generate free cash. Those are the things I'll be held accountable on. We've got line of sight now on phenomenal distribution. So usually companies say we're going to get something ranged, but it's not in the market, and they hope they're going to get it. This is happening. It's happening now. And so what we will do is continually update the market as we perform and exceed our targets, and investors can make the choice as to whether they see value or not.
One step more. You can go into a business and take out costs very accurately. We know that we've pulled out the costs in out of those grape growing contracts, that our cash outflows are going to decline materially over the next 2 years. We know that. So now, to everybody listening on this, go to Dan Murphy's, go to BWS, go have a good look for yourselves. This is out there, it's in the stores. This is not like some mining services company would be pretty hard for you to validate.
Yeah, right, yeah.
Get out there, buy a few bottles.
Yeah.
And
see the reaction.
Let me just wrap this up, and I'm heading out there. Tom and James, Tom, thanks for joining us. Really great. And James, for bringing this big idea. Really appreciate it.
Thank you. Thanks very much.